Hey guys, welcome to this video. In this one, I'm going to show you just about the dollar yen. I've done various videos on this currency pair lately, and with good reason. There's so much you can learn from just looking at the preceding move that's happened and continuing on from there. Now, we're going to talk about something a little bit different today, and it's in those falling knife markets that people talk about. In other words, when the market is falling sharply, okay, and it looks like this, or this, okay, or this, right? What you're getting is a very full body move. Now, some people say, okay, well, that price is good, I'm going to buy it. Now, at the moment, that might be true. It's a fairly low price. But really, the best thing to do is decide firstly what time frame you're actually looking at. Now, because this has been an extreme market, I'm going to swap to the monthly. And you can see I'm gliding into some previous price action levels around here. So I can expect some kind of a bounce as we continue to move back to these key MAs. Now remember that, those guys who saw me call this short all the way up here have absolutely killed it. That's great. You've probably shortened it down. You've taken your profit. But now you need to think about what's going to happen. Now, we did say before to take small light longs with early exits. That's why we would have killed them off nice and early so you could get out. And we knew the market was dragging to the downside. And now you get these full body candles. And the lower you turn your time frames, the more you can see a trickle. Now, what you really need to do generally is if you're trading on the weekly, okay, and as I said, we're looking for this kind of support. So it's going to be further to 125. Once we get around there, you're looking for what we call early entry confirmation. And that's changing your time frames and adjusting to the new market and looking at those lower time frames for signs that the market may be experiencing early price rejection. Now, of course, we learn all those rules throughout in Will of the Trader Academy. But briefly put, you're looking on those lower time frames for things that shout out to you, okay, people are starting to buy. Okay, perhaps there may be a further push at this point and we've hit that level of key support that's going to rebound the market. So we can enter, we can join on the train, and we can ride up for more profit and buy dips on the way up, get those good deals in between that long term or grand scheme of things move, if you like. So the idea is simple. Put your time frames up, okay? It's an extreme market, so you're going to have to look a little bit further back. Now, this level here is going to give us an ideal spot, and you can see we're thundering down to it. So we're really not interested in taking heavy positions as the market is thundering. You can see we're a little bit way off key price action nearer that 126. Okay, risk averse, you're probably looking 124, and if you're an active trader, 126. Once you get around there, you're going to have to ask yourself, are we still thundering through the level, or can I start to lightly scale in? In other words, is this price feasible for me to start to enter the market based on what I can see going on my lower time frames? Because at the end of the day, yes, this is pulling harshly, and if it's not stopping and it's ripping through those levels on this new market sentiment, then you might find that you're going to get affected heavily as a trader, right? And that's just because you're not ready for the market to turn. So you may look long here and just wait for that entry confirmation, drop those time frames down, look for those key signs within candles, larger bodied opposite candles, candle wicks, things that are going to prove to you that perhaps there's price rejection coming in the market. And what that does is that just puts up the chance of you making a profitable trade. If you're buying it when it's getting slammed, it's much harder to pick a position than if you're trading market reaction or early price rejection. Okay, so just make sure you're doing that in your trading. Early price rejection. Okay, I'm going to note this down. Early price rejection at key PA. Okay, PR at PA. You've got key price action levels. You're coming to this early moving averages. So price is rebounding to an even price. Okay, you can tell it's starting to get low because it's coming closer to those key moving averages. Okay, and also you're looking for that early price rejection. So you drop those time frames down. Use anything that spells to you, okay, the market's slowing. Perhaps it's looking to the upside. I'm going to enter and start trading it because I know that way I'll have a natural increase in the probability of my trade being successful because I get an early warning sign, a bit like the weather, if you like. So thanks for watching, guys. Hope that really helps. It's just another key lesson you can have, and I look forward to seeing you in the next one.